Hey guys, welcome back. You're still watching Power Breakfast. Now, like we told you, market regulator Sebi, after its board meet, has made some crucial announcements, including changes in buyback regulations, as well as investments into direct mutual funds. So Yash is here with a roundup of all of the latest announcements. Hi, Yash.
Well, that's correct, Pavitra. Good morning. First of all, market regulator Sebi in its board meeting yesterday has thrown some important amendments when it comes to the buyback regulations. The big message which came from the board meeting was that the market regulator wants to phase out buyback through open market or stock exchange mechanism completely by April 2025. But in the meantime, regulations there, that is open market buyback, have been made more stringent, like increasing the utilization of amount earmarked for buyback to 75% from the current 50%. Tender route for buyback is the more preferred one for market regulator Sebi, and here some relaxations have come through this particular board meeting. I'll just name a few of them. Market regulator Sebi has allowed an upward revision in the buyback price till 1 day prior to the record date of the buyback. Also, they've removed the requirement of filing draft letter with Sebi for such a buyback. There are more relaxations in the pipeline which would need a ratification from the Ministry of Corporate Affairs, and they are in discussion. That would be increasing the maximum limit of buyback to 40% of the paid up capital of free reserves of the company from the current 25%, and allowing net debt-free companies to have 2 buybacks in the same financial year. Apart from that, market regulator Sebi also spoke about the delay which has been coming in IPOs after the DRHP has been filed. Sebi said that the regulator can't be blamed for IPO delays. Many merchant bankers have been repeat offenders when it comes to not providing the appropriate information to market regulator Sebi, and now what will happen is that in case a delay from the merchant banker, the DRHP papers will be returned and will be disclosed on the SEBI's website. On increasing trading hours, interestingly, market regulator Sebi said if exchanges want to increase trading hours, they can go ahead and do that. There is no interference from Sebi, or there's no restriction from Sebi which stops them from doing so. Certain important large brokers will be given a status of qualified stock brokers. They'll have to comply with enhanced monitoring guidelines from market regulator Sebi. Onboarding of FPIs have been made easier. REITs and InvITs corporate governance norms will apply on them as well. There are a few more regulations. We'll of course keep talking about them throughout the day.
That is a lot of announcements from the Sebi board meet. Yash, thanks a lot for filling us in with all of the details. The other story that we are tracking is that the Reserve Bank of India's latest bulletin has highlighted that reduced input cost pressures as well as buoyant corporate sales could herald the upturn of India's capex cycle. However, it has warned that there should be no letdown of guard against inflation.